You've heard a lot about it. If there's one word that can sum up the problems with the economy in the world today, it would be debt. The United States is facing years of massive federal deficits. And in Europe, debt has led to a historic financial crisis. Dale Hurd has more.
In Washington, Republicans complain that the national debt is piling up because Democrats have unleashed an orgy of spending in recent years.
Because a cut is not a cut in Washington. It's simply moderating the growth.
Democrats think that spending money that we don't have is the only way to create jobs. Well, guess what? We tried that. It's called the stimulus. And guess what? It didn't work.
In Europe, years of overspending by governments have led to the current sovereign debt crisis, a mess that could bring about a recession in Europe that could easily spread to the United States and could lead to a global financial crisis.
The world is in a danger zone. In 2008, many people said they did not see the turbulence coming. Leaders have no such excuse now.
So where does the world go now? Can America find a way to deal with its national debt before it causes serious damage to the economy? Will European leaders find a way out of the debt mess that never seems to end? They're the questions that have economists and investors alike watching and waiting, and hoping the world doesn't fall off the financial precipice.
Well, we have with us a leading economic analyst and commentator, Mark Skousen. He's the editor of Forecasts and Strategy newsletter. He's written many award-winning and best-selling books. And Mark, it's good to have you with us in the 700 Club. Welcome.
Pat, it's a real pleasure. It's the first for me. I'm really excited about being here.
Delighted to have you. Talk to us about this debt thing. What do you think? What are they going to do in Washington? You have any solution?
Well, I think there are some real solutions, but we are in a new dangerous phase in America because for the first time since World War II, GDP as a percent, debt as a percent of GDP is now 100%.
Has it hit 100% already?
Yeah, $15 trillion, which is equal to our GDP.
Oh, yeah, okay.
Yeah, so it's a serious problem, and unfortunately, we haven't really addressed the problem. I mean, for a while there, we were a very exciting period. You remember when Bill Clinton working with Newt Gingrich in the year 2000, right at the end, we had solved that problem. But yeah, it's a very serious problem both here and in Europe. It's a Western problem, more so than China and places like that. They're in much better financial shape than we are.
You want to forecast what may be happening? That's your name of your newsletter, Forecast.
Well, I don't think we have the right leadership, Pat, in this country to deal with this problem. We don't have a leader that's going to say, listen, this is such a serious problem that we're going to have to really bite the bullet. We can't kick the can down the road like President Obama says, but that's in fact what they are doing, and that's what they're doing in Europe right now as well. It's the same old thing: the bailouts, European community issuing a lot of debt, cutting interest rates. This is the Keynesian economic policy that we've been suffering from for years. It's always worked in the short term, but now we've caught up with the long term. And so it's a new, dangerous era.
That's what Keynes says. We'll spend the money, in the end, we'll all be dead.
Well, in the long run, we'll be dead. But unfortunately, in the long run, we're now living in the long run. And we have to deal with this issue, and we're not dealing with it like we should.
What is the consequence if we keep going the way we're going? I mean, it looks like, for example, the Democrats have an opportunity to cut back a little bit on the spending on government employees, to reduce the workforce a little bit, and again to save some money, but they refuse to do it.
Well, but it's Republicans too. Even Paul Ryan's plan, as radical as that was, does not balance the budget in 20 years. Now, that's the static model. Of course, if you have a dynamic model, hopefully that means you'll get economic growth and we will move back to surpluses. But we need to live within our means. You know, the Scripture talks about temperance. We don't want to be misers, but we don't want to be spendthrifts. Well, Keynesian economics has pushed us to the spendthrift side of the debt problem. And so you ask, what is the result of this? And the answer is that we're looking for the possibility of a crisis in the dollar. We could have a collapse in the dollar. People could lose faith in our monetary system, which is a fiat money, paper money system. You know, I keep in my in my pocket at all times a gold coin.
Oh, just in case.
Yeah, enough to bury me in, I suppose. But, you know, this is a Mexican 50 peso, 1.2 ounces of gold. But I keep it to remind me of what sound money is all about, and that is gold. And what is gold doing? And as these crises, it continues to rise.
Absolutely.
Now, it's been a huge investment, but it could be could go further if we don't get the leadership. Now, I think leadership is coming in this country. I'll give you one positive example.
What?
Canada. Canada solved the same kind of crisis that they had in the mid-90s, where they had a debt, a falling Canadian dollar, a government as a percent of GDP was going through the roof. And in 2 years, they went from deficits to surplus, and then had 11 years of surpluses in Canada. No financial crisis in 2008.
They have oil, they have timber, they've got gold, they've got silver, they have uranium, and so forth. But what did they do? What steps did they go on?
The key thing was they had agreement across the political spectrum to reduce and eliminate the deficit. The conservatives wanted it because government was getting out of hand. Right. The liberal party up there wanted it because the interest on the debt was so high that money was going to bondholders instead of the social programs. So they both agreed to reduce the deficit. But then they got these supply-side tax cuts for 11 years. Canada has been cutting its rates, corporate tax rate, even reduced their sales tax rate, and so forth. So in 2008, they came into the crisis, the financial crisis, with relatively no problem. They didn't have any bank failures at all there. So we could learn a lot from our neighbors to the north, and in Australia and a few of the other places. The U.S., it's a problem in the West, in the U.S., and we have so many examples of how we can solve this problem.
If there's a collapse, I mean, our dollar is the reserve currency of the world, so all the transactions for oil and so forth are made in dollars. If somebody wants to buy oil, they've got to change their pesos into dollars to buy the oil. What's going to happen if we lose our reserve currency status?
Well, this is the problem, and there have been a number of prognosticators out there predicting doomsday, that the dollar will lose its reserve currency. That's not going to happen because it's so universal. And what do you replace it with? They're reluctant to replace it with this. It's not going to be the euro. It's not going to be the Chinese yuan that's run by a communist regime. So we're stuck with the dollar.
All right.
The problem is that the fear is a great recession, a stagnating economy that could get even worse, and then we would be forced to go back to the gold standard. But that transition period could be major financial disruption. And so this is why in my newsletter, Forecasts and Strategies, I'm doing my best to encourage people to be well diversified, have some gold and silver. Don't go overboard. And some people have gone overboard with their gold and silver investments. And invest in income-producing investments with solid companies, and you'll survive this crisis.
You think so?
Yeah.
Well, what about the European Union? Do you think they're going to break apart and the euro will cease to exist?
It's very clear that they're working overtime to keep the Eurozone together.
Right.
And they're desperate to do this. This is why they're increasing their bailout money, raising €1 trillion. This is why they may allow Greece to default and so on, but no one is going to leave the euro area, because once that happens, it could totally unravel, and that would lead to a global meltdown in the stock market, another panic. And that's why all the central banks are working together with Ben Bernanke and others. It's the standard, bail them out, but the key is leadership for austerity, because we have to balance, our unfunded liabilities. This is the new phase that we're entering, this long-term phase. The baby boomers are retiring now. Medicare in Europe and so on. This is the issue, and we have to confront it. And countries are making changes.
They are.
Yeah, they're privatizing their Social Security systems. So the liability switches to the individual instead of the government.
For some reason, the United States doesn't seem to have the political will. Or at least we've got this gridlock. We've got a Republican House. We've got a mixed Senate. The Senate doesn't want to go along with anything. It's unbelievable. What is it?
Yeah, no, it is a lack of leadership. I told my son this. I said, our generation made a mess of things. Now it's your turn. And, and unfortunately, we lack that leadership. And I think the next president of the United States, and I think there will be a regime change because you have this very high, stubborn level of unemployment. Who wants 4 more years of that? Nobody does, or anyone who's rational about it. So it's going to be a vote against Obama as much as really for a particular Republican candidate. But both of them, whoever gets in the Republican, that's my prediction, I think that they will change and recognize we have to start finding real solutions to our problems.
You embrace the Austrian school of economics as opposed to Keynes, or do you?
Absolutely, absolutely. I think the Austrian school. It's Mises who said that we've outlived the short term, and now we're suffering the long-term consequences of Keynesian economics. So they are the ones who believe in the gold standard, some kind of a sound money system. That's what we need to get back to. And gold will be a reserve. We're not going to go back to the gold standard unless we're forced to. But gold, you'll notice the central banks are buying gold now. Well,
I told our audience when the gold was about $300 an ounce, it was going to $800, and everybody sort of gasped like you're crazy. And now we're saying it's going to go to $2,300, and then it might hit up to $4,000 or $5,000 before it's finished.
It's very volatile. It's not something I recommend a 10% position as insurance. I don't think you want to go overboard with this sort of thing, and some people have. And it's great. For 10 years, you had a bull market in gold. But remember, there was a 20-year period before that where it was a bear market in gold. And so we need, once we get real leadership, gold is going to retreat. And silver is going to retreat. And your traditional investments of stocks and bonds, like Reagan, are going to blossom once again. So I think the Canadian model is out there. We can imitate that. And if we do have good leadership, we can follow that route. It's not too late to deal with these problems. People need to be optimistic.
I watched what they call the loonie, the Canadian dollar. It was like 82 cents, and I said, man, that thing comes to parity. But it did.
It's on par with the dollar.
Amazing. All right. Absolutely. Your newsletter is called Forecasts and Strategies, and it's highly recommended. How does somebody get a subscription?
Well, if they just go to markskousen.com, S-K-O-U-S-E-N, markskousen.com, they can subscribe at very special price. Know the signs of the times.
Signs of the times. All right. That's what the Bible says. And you've got some books, too, that you offer that are very highly regarded as well.
Thank you. My latest one is called The Maxims of Wall Street. It's a compilation of all the sayings on Wall Street. And one of the best is sell in May and go away. And I think a lot of people felt like they should have done that for the last 6 months.
Warren Buffett seems to be one of your fans.
He loves the book. I quote him actually more than anyone else. And but, you know, he's actually very bullish right now. He's doing a lot of buying.
I know.
And I think he's a very smart man in that regard.
He jumped into IBM. He's got these other investments. He's loading up. But, oh, man, talk about successful. And his money's been built in the stock market, too. It's been 26% or so compounded year after year after year.
Yeah, he's struggled like everyone else in the last 10 years. But, you know, if you look at the PE ratios, which tells you the value there, and Jeremy Siegel of the Wharton School was showing me a wonderful chart, and he showed very clearly that even Europe, the PE ratios are extremely low, historically quite at low levels, like at 10. In the United States, the U.S. market at 11. So it's definitely a bargain basement. So if Europe can deal with this problem, if we can get new leadership in the new election, then I could see a major recovery in our stock market in particular.
I am encouraged. Thank you so much.
My pleasure, Pat.
God bless you. Forecasts and Strategies, Mark Skousen, a wonderful guy.